Welcome, everybody's joined up, and let us know where you're from. Are you from the South? Are you from South Africa? We're expecting a lot of South Africans joining, but we're also expecting a lot of people from the United States tonight, which will be great. I think Lyndsey is well known in the United States, but also we've got quite a few registrations from the UK. There's Lesotho. Hi, Chaka. Very nice to see you online. We got quite a few from the UK registrations, so it's going to be really great. Peter Crow from New Zealand. Oh, 6 a.m. Good, not too bad. Normally the GGA events are very late at night for New Zealand, so it's really great to have you online. Thank you so much. Welcome, everybody. Please let us know where you're from. If you have questions for Lyndsey or Prof. King, please put them in the chat. If you, while we're going along, we might interrupt with some questions. We'll see how it goes. See, we've got lots of people online. Just a couple more minutes or a couple more seconds just to get us going. Very late at night for New Zealand, so it's really great. So thank you very much, everyone. And perhaps now we can hand over, and there's Mike from the UK. Hi, Mike. Really nice to see you. Right, Lyndsey, welcome. So Lyndsey Zhang is our author tonight, and she's also going to tell us about governance in China, and her book is about corporate governance in China. And we also have Professor Mervyn King here tonight. Welcome. And Professor King's going to enter into a fireside chat with Lyndsey once she's spoken to us about her book. So over to you, Lyndsey. I'll leave you to it. Thank you.
Thank you so much, Caroline, and thank you for Good Governance Academy for this opportunity, and especially thank you for Professor King to join this discussion. And I have to express my deepest thank you for every one of our attendees to attend this event, especially for some of you I can see from Asian country, from everywhere. It's either early or late. Asian is midnight. Thank you so much for joining the conversation. And please, like Caroline said, please jump into please share your questions if you have any question. If you want to, find answers for any of the topic I'm going to talk about a little bit. So, as the topic today is governance in China, so I will start by maybe introduce a little bit about my background. Then I will try to talk about my new book, Corporate Governance in China. As you can tell, I'm a Chinese American. I grew up in China and got education in both China and US. Moved to US 20 years ago. Graduate student. My background is finance. So I lived my corporate life for 15 years, worked for both US multinational company and the Chinese multinational company. I took position as head of finance, head of strategy. And in the middle 2010, I had a chance, after living in US for over 10 years, I had a chance to join a Chinese company to lead their merger acquisition in Frankfurt. That is the starting point of I am able to get exposed to corporate governance topics for Chinese company. And in the after that, in 5 years, I worked for 3 Chinese companies in different shareholder structure as well as corporate governance. They are private hold, state-owned, and public listed in Hong Kong. So that exposed me to different corporate governance structure, practice, and business practice. But back then, I didn't know much about corporate governance, to be truthfully. And but I do run into some colleagues, Western colleagues who also, like me, working for a Chinese multinational, because Chinese multinational company was expanding, doing overseas acquisition. And I sense I am more like my Western colleague. We had some moment like we feel confused about the Chinese companies' practice, and my ambitions as a Chinese American at the beginning starting to question, well, what happened and why I couldn't understand. Then I realized is the 10 plus years I was away from China, chasing my American dream, and China was growing very fast in the early 2000, early 2010. That gave me some motivation to try to dive into why I couldn't understand a certain business practice, what is going on. Then I was exposed to a program just like good corporate governance academy offered, but I went to a program in Harvard University, but it's very similar. Over there, I was exposed to the corporate governance topic. Then I feel like with my background, I want to learn more. Take me about 2 years with my interest, my curiosity, and my little bit ambitious I started over 30 Chinese companies, starting from Alibaba, Huawei, to hire to some newer company like Meituan, like Didi, TikTok, try to understand the corporate governance topic. And then I found this is how to say, I think I found it's very interesting why certain things I thought complicated. When I after my study, I found that it might not that complicated. It's just I didn't understand. Now with my Chinese background, I was able to dive back, try to get more insight. I found a couple of things. First is the cultural connection. Is a lot of Chinese companies' business practice has been deeply influenced by Chinese culture, and another thing is cultural influence, economic growth. We are in US. I worked for a fast-growing company. We call a phenomenon called growing pain. It's when a company grows so fast, everybody's focused on revenue, sales, and then after a couple of years, we looked back. Oh my gosh, my inventory is a mess. My logistic is a mess. I think China as a country is experiencing same situation. It's a growing pain. The country grows so fast, then didn't have enough effort and to look back for what's going on, the details. Then to a point like we're experiencing some different situation now. It's why working with Chinese company is so difficult. And I heard one of my attorney friend from German told me, Lyndsey, I'm feeling like I am navigating in the dark. So that is the starting point of my book. And I thought, okay, me as a Chinese American, if it took me 2 years to understand those business practice governance that make a Chinese company the way it is today, why don't I share this with my colleagues in the global community, which may help them or you or some of you shorten the learning curve, or which might help us to understand, to simplify, understand certain phenomena. I give you a very simple example. When I was working for one Chinese multinational, our parent company in China wire us cash, but it's always hitting into different bank accounts. My American colleague feel like, wow, is this some strategic plan? Does our Chinese colleague try to do we have to worry about money laundering? And it's because in US we are so legal sensitive. And until I had a chance to make my trip to China to visit my friend in China or my colleague in China, I find out it's just the accounts payable ladies convenience preference. Maybe Linda is preferred to use this bank A. Kathy like bank B. Maybe Marinda like bank C. So they just because of personal preference, and they didn't know what is the consequence in our end. But over here, we make very sophisticated guess. Oh my gosh, could this be any problem? So I think a certain situation like this could be easily understood by communication. But of course, this is just very one simple example. Now, since we're talking about corporate governance, let me share a little bit more. I told you about my background and pretty much what I think, why I'm writing the book. What is this book about then? So when I started to dive back, I found that my career growing journey is come along with China's 30 years corporate governance growing journey. China launched, reopened Shanghai Stock Exchange in the early 1990s. In the 1991, I was a freshman in college. So I personally experienced when Shenzhen stock market, before Shenzhen stock market opened, what is the excitement and even as a freshman, I personally experienced and I make a little bit of profit from buying the certificate, stock certificate, and I turn around, sold it on the market with, I thought it's big money back then. But I found my personal career growing journey is growing along with China's economic reform. It's just depends. It's just that the difference is me for the rest of my career I stay in US, but China been growing Chinese companies in their way. So this book, I selected over 20 case studies to explain, because I think it's not easy if I say, okay, in the 90s, some company can get an IPO just because they are approved by the government. So I thought, how am I going to explain this to my Western colleague? I found a very interesting company, Hire. This company was, because of this policy, they took advantage. They become publicly listed. They are able to raise fund for the next strategy. So case like this, I just curve out a small case in different stage of of China's different stage of companies' growing journey, along with China's different stage of the regulation reform. To explain certain things, I call it history is not repeatable. Because today, we cannot image a company can become a listed company just getting through the approval process. It's not repeatable, but it's the history. Some companies took this opportunity, become successful. So case like this, I gathered maybe between 20 to 30 cases. And also, I was thinking, if I'm going to write a book, myself, I only have limited experience. Of course, doing the research to write this book kind of helped me connect all the dots in my mind. I have to read, study, help me a systematic learning. And I also want to get some opinion and experience shared by my Western colleagues. So the book also covers over 20 interviews with board members, executive, and professors from different countries. They are Hong Kong, South African. I have a South African guest, friend. They shared opinions, friends, different countries. I asked them what they think about the corporate governance. Of course, people I interviewed, they all had experience either working with or working for or working around or research Chinese companies. So the book also covers this 20 plus guests, their opinion, their experience, their advices about how, as the Western business community or as the global, I keep saying Western, but it's actually, I think as the global business community, how we work with Chinese company, how we try to understand the Chinese company's corporate governance. And so when the book slowly get framed together, I found during my research, I was exposed to some scholars. So I found in the education system, 20 years ago, I came to state as a graduate student in the MBA program. I was exposed to many business case study, but it's always a Western company expanding in China. What is the challenge? What is strategy to establish a facility in China? But today, the world changed. We have in the 20s, in the 2010s, is the golden time for China's overseas acquisition. And we have a lot of Chinese companies have bought business in different countries, including Africa, a lot of in Africa, American, British, European, everywhere, almost everywhere, Australia. And the landscape changed, but I believe in the business school, we do not have enough case study for Chinese companies. That is the reason when I was talking with my Western colleagues, well, doesn't matter they are senior executive or board members, when I share what I learned from the Chinese company, like when I was sharing the Huawei story to my colleague, Alibaba story, and everybody is like, wow. So I can tell our understanding for Chinese company is limited. So I thought maybe this book could be a good starting point for the business community, for the scholars, even school, even student. I can expose to them a little bit as a practitioner. What is Chinese company really about? Today we know Alibaba has the biggest e-commerce platform. We know Huawei has so many stories with the US. They have technology advantage and certain challenges. But do we really know about their corporate governance? I think I'm interested to share a little bit. In Huawei, Huawei has this so unique corporate governance style. It's very creative. Huawei I'm not sure if you anybody have heard, Huawei has this rotating CEO system, now become rotating chairman. So there are 3 CEO now. All 3 of them become rotating chairman. So each of them take the term on the position for 6 months. 6 months later, they go back to whatever their responsibility. Another person stepped down. So doing this system, I think the founder of Huawei has his thought about Huawei's long-term growing strategy. He was worried if one person leading, if only one leaders in the organization, in case anything happened to this one person, then the organization will have no leader. And of course, today in good corporate governance structure, we have succession planning. We have different strategies to cover this part of his worry. But Huawei as a company started 30 years ago. The founder creatively put together this system because at that time, probably in China, Chinese company, they have no conception about the succession planning. Those things are not there and yet, but because Chinese companies didn't, back then they didn't have the luxury like in Western country. Company has good guidance from a very well-established regulation system. Without good guidance, many companies try to find a path for their growth. And some of those solutions become very creative. In my book, I covered Huawei, I covered Alibaba. It's creative in different way. I covered Haier, again, a different structure. Haier has this 人单合一. It works perfect for the Chinese facility, but they cannot roll out at the early stage. They cannot roll out to their overseas subsidiary. But now they are making some improvement and changes. So it's Haier. Then we have new Chinese companies. Why it's interesting why I'm writing the book in early 2021. I keep saying new case came in, new case, new creative, like we all know TikTok, I bet. And the parent company of TikTok, ByteDance, 38 years old, ByteDance founder, CEO, and chairman. He retired in May of last year and decided he wants to focus more on social responsibility. take in order to make more effort to innovation, to help other firms to establish a longer strategy for the company. So that opened my mind about, well, we're talking about social entrepreneurship in global wise. That is a social entrepreneurship trend in China as well. So I grabbed this case in my book. And then also during the time I was writing the case, we have the first ever class action lawsuit ruled in favor of 315 minority shareholders. This is the first ever class action lawsuit, and which is also an indication of China's regulation system change. Now the platform was established in 2020. However, the first lawsuit demonstrated the fact the platform works in 2021. So this case, I grabbed it in my book too. So I feel like with China's fast growing, it's really, it's really not easy for to systematically learn, because the country is still, the country is still trying to evolving the system, try to improve the standard of many of the regulations. I think for our attendees to come to today's webinar, you must be interested in China. You must, heard the news from here and there. You must be overwhelmed by so many things happening in China, like I am. Like I can, after I finished the manuscript of this book, I gathered, a lot of materials. The new things happened after this book. So China has been changing so much. So I thought, first of all, learning. I want to learn. I want to share my learning journey. This is my first ever book, but I do think the learning can never ending. I will keep my effort going, and I'll keep sharing what I can learn, and and I also want to know what everybody think about and what you are curious about, because that can help me with my future project or future book or future articles. So I hopefully with my, I don't want to say unique, so many people have my background, but with my special background, my multicultural background, I can be easy, because I read Chinese, I can write Chinese and English, so it can be easy for me to understand, and I'm happy to share with everyone. And so like I told Caroline, I said, let's ask people to jump into this, because I can talk about the corporate governance in China forever, but I don't want to bore you guys. Do you guys want to ask me anything? Please jump into it before I continue another topic.
Thank you, Lyndsey. Thank you so much. I think maybe one question that's come through really is, in terms of your experience, and just before I ask Prof. King to jump in, yes. In your experience, what are the key differences in the corporate? What really stood out for you? You mentioned one around the culture. Mm-hmm. Is it absolutely understanding that the culture of the country has impacted how the board operates? But yes. What are the big takeouts for you? Of course, the other one is this evolving nature of it. But yes. the big differences for you in the West and in China.
The big difference is, I think the big difference, it's this controlling structure. If I compare US, because I live in US for over 20 years. In US, I think OECD has some statistical number a while ago. In general, 70+% of the company share is holding by institutional investors. This is in US, and only maybe 3% was holding by state. In China, the number has to be reversed. It's almost like a 70% or something. In average, Chinese companies share is holding by the state. And the institutional investors' share is increasing, I think, from single digit to maybe 14% or 15% right now. It's a big reverse. So in China, people was why the institutional investor is not really active and why, people, always question about the party's involvement, why it's always so transparent. I think the big reason is this controlling structure. If compared between US and China, of course, the Chinese company, we have the state-owned company, public listed state-owned company. For those public listed state-owned company, the state ownership is huge. And we also have companies like Alibaba, like Tencent, they are private company, but still public listed. Those companies, the state shareholder is less. Maybe it's from indirect, and institutional investor shareholder is big. But on the other side, China has another group of controlling share. The founder, I hate to say family, because I think all the China or Asian country, we have the family ownership, big family group ownership. But in China, it's the founder ownership. Because think about this, China only opened the door in the 80s. So before 80s, there is no corporation. There is no corporation before 80s. I mean, I'm talking about the modern China. And we only have the first corporate law came in the 90s. So corporation starting in the 90s. So like companies like Huawei, they are the old generation of Chinese company. And the founder of Huawei still runs the business. So we have this founder ownership. I think the next challenge, or already challenge right now for many Chinese companies, is the leadership transfer between founder generation to the next. I hate to say next generation, because I see many traditional, or I don't want to say old, many like a company they're 30 years old, try to transfer the leadership to next generation, daughters, sons, family members. They are successful stories. I personally experienced some of them successful, and I personally also victim some struggles. And I had one of those cases in my book to talking about generation transfer. And but the generation transfer also, is a challenge, but also has the pros. Pro is with this challenge, there must be change. The change could be go public, right? Get another strategic partners. The change also could be, establish some strategic partnership, invite different investors. But either way, at this moment, controlling structure from both state and founder group are still the biggest difference between China and many other countries.
Thanks, Lyndsey. And I guess to Prof. King, then that's quite a change from where we are in the West in terms of the age of governance and the age of corporations. It's significantly different.
Well, it is significantly different. And my advice to any entrepreneur is going to China to start a business is that they keep by their side someone like Lyndsey all the time. Because if they have Western advisors, such as me, for example, they won't see the nuances of a situation where in the 80s and 90s, from state-owned assets, you suddenly had a corporation. Mm-hmm. And the assets then were put into the corporation, but the vast majority of the shares were owned by the state. Mm-hmm. And there was no company law to regulate the situation. So that was the situation until the 1900s at least. And then we had, China was growing economically. So it was felt by the PRC that maybe we should move towards a Western style oversight in companies. And that meant to have a supervisory board and to have more protection for shareholders, particularly the minority shareholders. But it was not being regulated. So the next step was in fact to establish a regulator, and that was the Chinese Securities Regulatory Commission. And then came the company law. Suddenly you had a Companies Act. And the company law tried to deal with horizontal conflict and vertical conflict. The horizontal conflict was between controlling shareholder, who in the vast majority of cases was the state, and minority shareholders who were, I think, very nervous in investing at that stage of the development. And then you had vertical conflicts as well, because I hope Lyndsey is going to confirm what I'm going to say, is that the discipline of managers fell under the auspices of the shareholders, not the board. So you will see a completely, that's why I said it was like a potpourri. You went there, and if you had this Western style of architecture of companies, you'd make huge mistakes. I am fortunate that I had a client who wanted to list a gold mine on the Shanghai Stock Exchange. And he couldn't do it just with shareholders. He had to bring the state in. So, and I can't remember what the size, let's say the company's market capitalization was 100 million in US dollar terms. It eventually ended up being $200 million because the state wanted $100 million and he had to find another $100 million. So state-owned enterprises took about 2/3 of the market capitalization of companies. And companies then started saying, well, the West is looking at corporate social responsibility, and Lyndsey referred to that. And many companies started talking about CSR. But it was CSR, to the credit of the regulator, that looked at the social responsibility of all stakeholders, not just the shareholder. So you can see again the difference between ourselves and China. But 80% of wholly owned, state-owned enterprises have now been transformed into corporate entities. The main body is the shareholders meeting, the General Assembly, from the architecture of the company is the main body. Then the board of directors, and they look after the operational implementation of the company. Management is responsible to the board for the daily operations, and the board has oversight, but the shareholders have got huge powers, and they can change the board or can change the very purpose of the business of the company. It's quite extraordinary. So shareholders, and I think it's from Lyndsey, from up until the 80s and 90s, the state owning all the assets, that they find it very difficult to become an equal or even a minority shareholder, heaven forbid, in a company. And that's whether it's listed on the Shenzhen or the Shanghai Stock Exchange. And what is interesting now is that you find sustainability issues. And as we are moving now into huge corporate changing and corporate reporting, and the announcement was made only yesterday, I think it was, that we have what's known as double materiality in the Western world, where you have what's happening inside a company, its operations, and how it uses its assets. And it has outputs such as waste and its product. And then its product goes out into society and has an impact on the three critical dimensions for sustainable development: the economy, society, and the environment. So you will see it's inside out. But at the start of the second decade of the 21st century, there was several seminal events, and I think the most impactful was the collapse of Lehman Brothers, which impacted on companies in China, but all over the world. It changed the financial conditions of companies, their balance sheets. It changed their operating performance, their income statements, their cash flows. It changed their risk profile, their cost of capital. So suddenly, and I was the founder chairman of the IRC, so I'm speaking about this with personal knowledge. You won't find the word enterprise in the integrated reporting framework. We just spoke about value creation. And suddenly, thought leaders in this ESG space were saying, but hang on a sec, these three critical dimensions for sustainable development, enunciated by Mrs. Brundtland in 1987, just when China was starting to get going with their corporate entities, have an impact on the company itself. So suddenly sustainability, like a coin, had two sides: inside out and outside in. And there have been many announcements and discussions over the last 6 months. But as late as yesterday, the announcement was that the ISSB's standard setting board and the Global Reporting Initiative, which is the dominant board for inside out standard setting of sustainability issues, their standard setting board are going to work in collaboration with the ISSB board. So you're going to have parallel corporate reporting on sustainability reporting, which is quite extraordinary because when they announced the formation of the International Sustainability Standards Board under the IFRS, International Financial Reporting Standards Board, they did not include the inside-out standards, and said on the question of interoperability, if Carolyn, you and I were directors, we thought there was something of material importance from inside out, material importance being defined as that which would make the user come to another conclusion about the long-term health of the company, for example. Then you put it in. But in the document which was issued by a statement of the Group of Five, as it was called, they had a nesting document. And the biggest nest was sustainability issues which were inside out. The next nest was sustainability issues of outside in. That's the three critical dimensions impacting on the company. And then the very smallest nest was the financial aspects, financial reporting.
Yes.
Well, I've been involved for 30 years in all this. And the end game has always been to try and get to a global, comprehensive corporate reporting system. So when I go to China and Carrie asks me to help her start her business, she's the entrepreneur in China, I can advise her and help her. And I can read the financial reports of Chinese companies and know exactly what it means. So what is interesting also is that the supervisory board, as it now is, Carrie, in China, make sure that managers are following the articles of association. of the company. They make sure that the articles of association are, and they've got the right to inspect the financial statements of the company. So with all this, you will see that it's very different from how we understand.
Well,
and that's why I think Lyndsey's book is so important, that people can read it. But I end what my input is into this. If any entrepreneur online is thinking of opening a business in China, get someone like Lyndsey to sit at your elbow all the time, because you might think you're doing something right, but it'll be absolutely wrong. I mean, your articles of association, who would dream in the Western world that the supervisory board, not the board, not the shareholders in general meeting, would actually make sure you're complying with every square centimeter of the articles of association? There it is. So again, I repeat, the shareholders in general meeting in China have huge powers they don't have here. And you've got to think differently. So you've got to have a different mindset. And that's why, Lyndsey, I think your book is timeless, because, as you say, the Chinese economy is growing, and more people from the West are coming in to invest. And they must know from a functional point of view what they need to do and what they shouldn't be doing. And all I can tell them, don't take me as an advisor. Have Lyndsey as an advisor. Thank you.
Thank you. Sorry, Lyndsey, you wanted to say, I've also got, I wanted to ask, Peter Crow's got a question about those, the state being a shareholder. I've just asked Peter to come online if he's able to ask his question. Let's wait for Peter to come online if he is. There he is. Great, yes. Thank you. Peter, if you want to ask your question.
Yeah, thank you very much, and good morning, good afternoon, and good evening around the world. Peter Crow from New Zealand. The sun is not quite up yet. Lyndsey, this is fascinating, and to Mervyn King, thank you very, very much for your comments as well. One of the challenges we have in boardrooms, in corporate governance around the world, is the extent of control. And the Companies Act is the top of that heap. But in China, we've got a very long arm of the state. So I wonder if you can speak to us about the influence and the ongoing influence and expectations of the state in relation to these issues that you've been talking about. Thank you.
Sure, thank you. Well, because as I personally worked for a state-owned company, subsidiary, put this way, in Hong Kong, and I had a chance to have some interaction with some of the government officials, or some, attend some meetings. I agree. It's not easy to. When the state is, not the state, when the big shareholder is in control, like Professor King mentioned, it's not the board, make a decision. It's the shareholder directly influence the management. And keep in mind, many of the management, especially the executive team, they are also having government official title. So technically, they are not a business person. They are not a entrepreneur like most entrepreneur. They are government official. So their career is depending whether they can help the government to achieve certain goals, because state-owned entity is almost like the channel for the government to achieve certain economic or social goal or target. So my opinion, my experience is dealing with a state-owned company, try to understand the decision maker, because it might not be easy. It wouldn't be easy. My personal experience is take me a while to know why my proposal is rejected with different reason, and what is the true reason behind it. It's not easy, but it's really helpful. Find someone who might be able to get some connection to help you understand who make decision, because otherwise the response you get might not be the true reason why certain things cannot go through. But I'm always like, I think I'm always, could be super optimistic. I can tell during my study, I realized in 2018, China issued the updated corporate governance code. That is the first time with the update. In this updated version, there are a couple of things I think it's worth to watch. First is the updated quote, encourage minority shareholders to participate, encourage cash dividend, also require the state-owned entity to document parties' role. It might take time to make everything very transparent, but at least it's a trend. Hopefully, 5 years, 10 years from today, our conversation, we can see more transparent in the decision-making process, who make what decision. Then as the rest of the world, when we're working with Chinese company, especially state-owned company, we wouldn't feel, this is exactly what my attorney friend told me. Lyndsey, I feel like I'm navigating in the dark. So I feel like now China, another good sign I have to say is during my research, I think China has been trying to elevate the regulation system. If we watch what Chinese government has been done in the past year, Chinese government has been very harsh to its entities. So I think the government try to show the world some effort, try to make things right, try to align, I put this way, try to align with international practice. Because one thing very important for the Chinese government, whether it's before or today or tomorrow, is attracting foreign investment. Today, when the entire world is talking about ESG, talking about good governance, and if Chinese company doesn't go along with the word, Chinese market will not become attractive. Of course, taking some time. And also, I think this, thank you for Professor King mentioned about CSR and ESG. I think this is also a good movement for Chinese company, because the companies, including Peter, what you mentioned, what you point out is the non-transparency issue, because you're in the boardroom, you don't know what to do, and the hierarchy is always there. I think this ESG trend just pushed the Chinese company to become more transparent. Today, starting from E and S, the most recent ESG guidance already require E disclosure, environmental disclosure as a requirement, S as a recommendation. I think next will be G. When the G becomes requirement or recommendation, we should see more transparent. Of course, I'm not trying to defend the Chinese company. I feel like I'm always trying to see the half full of the bottle instead of half empty. I feel like those are the futures if we can capture. And I think if today it's a very hard situation. The entire world has this pandemic. China is going through the worst situation in the entire pandemic with the coronavirus. But I think this is just the experience also for Chinese government and the companies to realize this is an international world. You cannot, Chinese company cannot isolate by the world to go through any pandemic. I think those trends and the additional today global investors look at the look at the ESG score before they make judgment, make investment decisions. Some Chinese company already taste if they have good ESG score, they can get cheap capital. They can be more attractive to the international global capital market. So I think those are the motivation for more and more Chinese company to get into this ESG and to align with ESG standard. Also, with China now consider themselves as the second largest economy, and the government wants to take the lead, wants to have the voice in the global. I think the government understand they have to establish some good practice to become a leader. Otherwise, who's going to follow? So I think those are the good trend moving forward. But again, come back to today. We are in today's world. We are still struggling. And I think if I have to advise people, I think communication. Because in the Western, in the rest of the world, we are used to well-established regulation system. We think very sophisticated. As some Chinese company, they might not really that sophisticated. They just simply in the early stage. Like I shared with you, the accounts payable lady, just I like bank A, I like bank B, and ends up in our end, oh my gosh, is there any trouble? Are we going to get ourselves in any problem? So it's just communication. If I agree with Professor King, having an attorney, having an advisor by your side is always helpful, but we also have some small middle level company we cannot afford or we cannot, and so I think find your friend, find your networking, someone familiar with the system or someone who can share opinion, that will also helpful too. I see Michael.
Lyndsey, I just want to make another point before people ask another question. And that is, many companies that are listing on stock exchanges in China today, the government lets it happen, provided they have a majority shareholding, that's A. B, they make sure in the objects clause, they achieve a political purpose.
Yes.
And the company, therefore, I was brought in as a consultant to a company in South Africa that was owned by the state. And then an entrepreneur came and bought a small share and were listing it on the Johannesburg Stock Exchange. And our government said, you can list this company, provided it was a telephone communication company, telephonic, provided you lay down lines for telephones in the rural areas where people hadn't had telephones, at a time when people were not having line telephones, but going for cell phones. And so it was a company for profit, but it had a noose around its neck because of this political purpose. And as they were laying down these lines, copper thieves were stealing the copper wires behind the thing. So I was called in as a consultant. I met with the board and the minister, and I was introduced, and I got up and I said, this is my first sentence. I just want to know, have all of you taken your Prozac this morning? Now, Prozac is a tablet for bipolar people. I said, because you must be all bipolar. How can you run a company where you've got a political objective, which is non-profitable and will never be? In fact, it's expenditure, and you're neglecting the profit side of the business. So you bipolar, you should be having Prozac every morning before you start business. So I'm telling you that real story concerning me, but it's a problem in China. That they put in the objects clause as a political some political thing they want to achieve. They wanted to achieve through the company.
That's right.
Sorry.
Thank you.
Yes.
No, thank you. So I've asked Michael just to ask his question. He had a question around ESG and governance in China.
Yeah, just going to ask about future trends with environmental, social, and governance, and how that will, how you see that developing going forward.
I think Chinese government, yeah, thank you, Michael, for the question. Very good question, very timely concerned. I think, personal opinion, Chinese government take this ESG very seriously. And also in China, as you can see, anything if government involved, it's going to happen very soon, one way or another. I can say CSR, because many Chinese companies are either state-owned or inherited from state-owned or split from state-owned. Somehow they have this state blood. So with state-owned company, it's a part of the responsibility for the business to take care of the society. So I say S is in the blood of Chinese companies, how to say, gene. So I can tell for the ESG, for the CSR, many companies take this as philanthropic. It's just like, part of, the thing we have to do. But ESG is different. Since 2020, if I watch ESG investment theme fund, the number grow tremendously, even for individual investors. Now people try to tie with ESG or try to go with the investment company. They have the ESG is, how to say, seriously, not everybody understands what ESG means in China today. I had a joke from the friend asking what ESG means, and the people couldn't understand. They just make up a name, easy pronunciation for ESG, so they can remember they have to go with ESG. People do not understand, many people do not understand what ESG means, but they know this is what the government encourage, promote, because when the government issue regulations, government has, in 2020, we have the new Green Bond Project catalog issued, aligned with the international standard. We have this new ESG reporting guideline issued in June, trying to enforce the ESG reporting right in the midterm in June. Why it's issued in June? Because it's the midterm. And we have this, climate bond initiative opened the Shanghai office. So, and we have the National Carbon Exchange Board, exchange market opened in Shanghai. And we have the Shanghai Data Exchange opened. So everything happened so frequent in 2021 associated with ESG. ESG, I think ESG will become another opportunity for China, maybe take another lead, just like in CSR. CSR was not original from China, although Chinese companies take care of the society. CSR was introduced to Chinese company from the Western partner because Western partner has to follow their national regulation. But today, Chinese company are the CSR most leaders. I think ESG will probably have the same impact for China. And in addition, China is not just promoting, advocating ESG in China. I think as before everybody come in, I had a brief conversation with Caroline. As we all know, China is the biggest trading partner in African country and also probably biggest investor at the moment. Although, like Professor King said, many investment is come from the government side. But I'm not sure if everyone watch, follow the news. China used to invest a lot of coal project in African country, but last year, I think it's in September, October, China withdrew one big project, coal project, and by withdrawing that project, it was at a very mature stage. I couldn't remember the name of the country, but it's an African country. After withdraw the project, China made the central bank made it very clear China will not invest in coal project investing country in the future. So I think China not only doing this inside domestic, also want to become an influencer, because China today has money, has funding. Many companies expecting funding from China simply because if people try to get funding from World Bank, maybe the application process is very long, the auditing process, the monitoring system is very sophisticated. China funding system is still in the establishment stage. So I don't want to say easy, but it could be less step to get the funding. Plus China, like Professor King said, the government wants to achieve some political goal, so they are willing to offer funding opportunity. However, I think China wants to take this advantage, this opportunity, increase the country's influence in many countries. So I think China will try to use the funding. Now, China also issued the very first, clean energy fund in early of last year for global investors, but made it very clear it's only for renewable energy, clean energy. So I think this ESG, thank you for the question again, Michael, will become a big thing in China. It's already started, and it will roll bigger once China open the system. And also it will take China, take Chinese company, Chinese fund, Chinese bond to a bigger global scale. That's my opinion.
Thank you, Lyndsey. And we have run out of time, but there's a very good question here from Rachel Johnson from ACCA. I'm going to send that through, Rachel, to Lyndsey, and Lyndsey will be able to reply to you then on that question. So thanks very much, everyone. I really do appreciate it. Maybe just to say that in the development of the ISO 37000, so the international standard for corporate governance, China had a very big delegation in negotiating that. So China had a very big say in what landed in ISO 37000, and they will be applying that in terms of corporate governance, obviously within these constraints of the political or state-owned influence in these organizations. But thank you very much, everybody, and thank you for your attendance. And the video will be loaded to the event page, and anyone wanting certificates, those will be issued during the course of the week. So thank you very much, everybody. Thank you, Prof. King, for staying up so late. We do appreciate it. And thank you, Lyndsey, for joining us.
Yeah, thank you, everyone.
Thanks, everyone.
Your question will be answered. Thank you, Professor King, for staying late. And
thank you, Lyndsey. Good to meet you.
Good to
meet you. Thanks, Carrie.
Thank you. Thank you.
Thanks, everyone.
Sorry for keeping you up so late, Carrie. I don't go to bed before 11, 12 o'clock.
It's a pleasure, for both of you. And I know you both stay late. Thank you very much for the opportunity.
Thank you, Lyndsey.